for joining. Welcome to today's ASNOA University Life Insurance and Life Settlement Workshop by Joe Kobel, co-founder and CEO of ASNOA and Allegiance Insurance Services. I'm Kathy Bova. I'll be the facilitator today, the Vice President here of Education at ASNOA. The overview of the workshop is going to be that we'll meet every Wednesday, so 4 times, starting today through March 25th. The same time, same station, 10 a.m. through 11 a.m., it's a 1-hour workshop, Central Time. There should have been an online registration link that you received that you have the ability to add that link to your calendars, and it should be on there for each session. The audience will be muted upon arrival, but we do encourage interaction, so please feel free to chat in questions, and we will definitely review those questions at the end of today's lesson. We're also going to send an evaluation after each lesson, asking you kindly to complete that evaluation and give us your feedback. Upon completion of all 4 lessons, you will receive an ASNOA University Certificate of Completion. No CE credits are available at this time. So what I'd like to start out with is letting you know that the registration is open for our sales conferences. I'm going to actually take you out to our website. If you all have not seen the registration email yet, or you should have, everybody's been invited, or there should have been a few out. You can all check it out, all the details about the sales conferences at our website at asnoa.com. I want you to go to events and affiliate info. In affiliate info, there you'll find the registration details, the location, agenda, travel and lodging, and even scholarships. So the registration, you'll click here. The locations, again, all of this information is right here. This is a brand new format that we're bringing to you. We're going to be offering the agents that are in the Arizona, California, Colorado, Nebraska, Nevada, Texas, and Washington to attend the Arizona event, and then the agents from all of these states here to attend the St. Charles, St. Louis event. And this is how you just go in to register. What we want you to do is take a look at the example agenda, the new format that we're really excited about bringing to you this year. So Wednesday is going to be all workshops. So it's going to be all workshop related to tips on improving your agency, things in your agency, best ways to find and hire, retain top talent, key investments to make for agency growth. So it's not going to be an epic class. I'll talk about that in a second. You'll have a full day here, and we'll also be hosting a welcome reception after the workshops are done, and a panel of peers will be on that agenda as well. On Thursday, it's a full sales conference and trade show. It's definitely a new format this year as well. We have keynote speakers. We are going to have on top trends. We're going to have breakout sessions as well that you'll be able to pick the sessions that you choose to go to. We're going to have trade show and lunch. Obviously, there's always plenty of food at these events. And we're going to also host a dinner and awards ceremony that your spouses are welcome to attend as well. So plenty of keynotes, plenty of exciting topics to learn about and bring back to your agency. So we're encouraging you, and because we're doing breakout sessions this year, maybe bring somebody else from your agency so you can cover all the breakout sessions. And then stay for the next day where you'll have to take advantage of the the 5-star resort. We were able to get an ASNOA discounted rate. That's incredibly a great deal. And that day you'll take advantage of breakfast. They'll have activities, there's spas and things of that nature at the resort to take advantage of. So we're encouraging you and your family to take advantage of that. So we're looking forward to all of you registering for it. If you have any other questions, feel free to email training@asnoa.net. And then we have scholarships and contests. So this year we're offering 10 scholarships, 2 per event, to all eligible affiliates. So every month there will be a new scholarship and a contest to win a scholarship event closest to you. So the scholarship winners will be determined by the data that's in Epic. So make sure you're keeping all of your policies up to date to win. So anyone can win. It's all predicated on what you're doing new. So February we had a contest of who sold the most packages. We'll be announcing that winner. In March, it's going to be who's the most commercial lines written premium is the next contest. So all of my SBCL students, I'm excited to hopefully see one of you win. April scholarship will be the most new policies issued in April, so it's going to be a PIF count. And then May's scholarship is going to be the most new life written premium on paid life that is placed. And then we're going to have some ongoing contests for the most warm referrals that you send over our way. So the scholarships are going to include round trip airfare or up to $500 and lodging for one room per winner for the duration of the conference. So take advantage of that. There's also additional cash prizes that we're going to be giving away at these events. And then also trade show prizes. There's several. Those are always fun to do as well. A lot of trade show prizes and giveaways. So please join us, register today. If you have any questions, feel free to ask. And we did mention there's no EPIC class on that event. However, the Dream Team is actually hitting the road. So we have our own road show going on this year. Laura and myself will be traveling to you. So we're going to be in Arizona, and we're going to be buddying up with Wealth Management in a Box. So we're going to have 2-day workshop. The first workshop will be the ASNOA U workshop, and you'll be able to check out our agenda here. We're bringing to you some strategic planning exercise of what to do right now with your data, what to do with what your data should do for you, as well as some peer-to-peer roundtables and top trends in technology. So it's a full day. Wealth Management in the Box will be hosting dinner that evening as well. And then day 2, they will be hosting an entire day filled for you as well to talk more about life insurance and retirement planning, life insurance, retirement planning, and annuity business, and all the opportunities within. I know they'll be covering lesson 2 for an hour next week, but this is a full day you'll get to spend with them. So we're going to be in Arizona. We're going to be in Missouri or Kansas. It's like a suburb of Missouri, they're saying. And then we'll be in Illinois as well. The same agenda in all 3 states. So please feel free to register today. So now that I got that shared, I was able to share that with you. I would now like to introduce to you the leader that inspires me, my boss, Joe Kobel. Good morning, Joe.
Good morning, Kathy. Good morning, everybody. Thank you very much. I appreciate everybody taking the time to join this webinar, and I think that if you just look at it as taking one idea and implementing it into your practice from everything that we're going to discuss this afternoon or this morning, I think it'll be useful to you. I always look at a meeting when I go to a meeting or a webinar to take one useful piece of information. I know everybody's busy, but as one of my mentors always said, you have to take time to sharpen your axe. You have to take time to stop chopping the wood to sharpen your axe. And that's what we're going to do a little bit of today. This is going to be more of a life insurance 101 class, because I know that there's a lot of people that are just on this call or on this webinar that are just getting into the life insurance aspect of the business. And I just want to share some of the tips, some of the things that I've learned over the years. Just a little bit about myself. I'm one of the founders, Ray Petroselli. For those of you that don't know me, Ray Petroselli and myself, we started the operation of this company, or we started the planning of this company in 2001. We were up and running in 2003, and took it to the next level with being ASNOA, as well as Allegiance Insurance Services, which is our retail personal lines agency. I also wanted to mention that this year I'm going to be celebrating 40 years in the business. I started when I was about 12, so if you calculate that out, it works out about the way I really want it to work out. But a lot of experience, and I also, when I started this career, and what really piqued my interest in this career was I started out as a life-only agent and spent my first 6 or 7 years selling life insurance only. And the first application that I had taken, unfortunately, the young man was killed before the policy was issued. Back then, we were selling $1 a day premium. So I sold a $30 monthly premium, which the young man paid $30, and we paid a $33,000 death benefit. And I'm like, my goodness, that's really some powerful stuff. So, that was 40 years ago. So obviously, the cost of living has increased drastically, and it's not bad to start out with $1 a day, but we certainly like to see some more than that, and you'll see the rewarding portion of it. So what I'd like to do is get started here. Kathy, I'm not in control.
Here you go.
Here we go. Thank you. So how to start selling life insurance and life settlements we're going to talk about. We have a special guest, Mark Ruskin, that we'll bring on later in the program. I wanted to discuss how to increase your revenue, and one good way to do that is to sell life insurance. We're going to review some statistics of the business. We're in the statistic business, as everybody knows, insurance in general. We're also going to talk about how to create the need, some tips on that. We're going to review some life product options. I'm not going to get too much in depth into product options because in our future sessions next week and week 2 and week 3, we're going to have a little more in depth on the product knowledge. We're going to talk about some death claim scenarios as well, and tips on how to start selling life insurance in your agencies today, and how to capture the opportunities within your agency starting today as well, and how to close the deal.
Joe? I'm sorry, Joe, we lost your audio. So hold on, everybody. It sounds like Joe's audio just got changed. Hold on a second, Joe. We lost your audio. So if you can dial back in. There, are you back? Hold on. Well, we're always worried about this. We tested everything. Hold on. That's an audio issue. We'll be right with you. It looks like you got to dial back in, Joe, and dial in your PIN. So I'm not sure if you had a drop call or what happened. While we're waiting for Joe to jump back on, there you are, Joe. Hold on a second. Okay, you're back. Sorry about that. I don't know what happened there, but you should be back, Joe.
Okay. I apologize for that. I don't know what happened.
Yeah, it looked like it just dropped your call. So you should be good on the slide again. There you go.
Okay. So lesson 2, I wanted to talk a little bit about some really terrific and dynamite people that I really respect in this business as well, is Wealth Management in a Box. We've got Kelly Carter, Steve Conti, and Joyce Thomas. And these folks are very knowledgeable and they're to help you in any which way that they can. So I'm really excited to introduce them next week in lesson number 2. Lesson number 3, we have opportunities for your agency with a guest speaker, Terry Pleamer. He's with Pekin Life Insurance. Pekin is going to be available to the majority of you. They are limited in some states that they do business in, and we'll discuss that in lesson 3 with Terry as well. And then lesson 4, probably my second favorite, because it's Kathy and Kathy's team, and along with Megan, and they're going to talk a little bit more about how to get set up with marketing and tracking your book of business, tracking your dead files, tracking prospects, new prospects, and how to enter life policies into Epic, and resources and tools that are available to you. So another exciting class. I think that all 4 of these sessions are going to be well worth your time. So lesson number 1, how to get started selling life insurance and life settlements. By now, you should have your handout materials. I'm not going to go through each and every one of those just due to lack of time. I want to save time for questions at the end of our session. So let's learn how to increase your revenue and change people's lives with the value of life insurance. By how much revenue can you make? Well, actually, there's no limit. As we know on this side of the business, there's no glass ceilings. So it's as much as you apply yourself. Most commission levels average between 90 and 115% of the annualized premium. That's pretty generous from most of the world that most of us came from, as we know, from the captive side of the business. I also believe in setting goals in writing. It's no different than getting in your car in the morning and you need to get to work. You have to have some sort of direction. You have to have a plan on how you're going to get from point A to point B. And if you don't put it in writing, it's out of sight, out of mind. I'm a firm believer of that. You want to track your sales and track it in Epic as well. So it gives you an idea. You might have a goal of a monetary item. You might have a goal of a physical item that you want to purchase. Your significant other may say, hey, I want to do this or that, or pay for a vacation. Again, one way to track it is going to be an Epic, and that'll be covered more in lesson 4. I always found it useful to keep a life list on my desk. So I never let anybody leave my office without talking to them about life insurance. There was on one occasion I lost, where I'll get into a little bit later. Quite interesting story, but at the same token too, I always kept the life list going. Who's interested, who needs life insurance, who wants life insurance, who wants to talk more about it. I want to talk about the $100 story. I came from the captive world, as many of you have. And we used to have a sign that I thought was very useful, very simple, very basic. However, it was a great part of my success in selling life insurance, and I want to share that with you. So it was a placard that would be made out of cardboard, and it would stand on your desk. It had its own stand, if you will. It would unfold, and stand on your desk, and it would face the client on the other side of your desk. Back in the day, we used to have a lot of walk-in business, so we used to have a lot of clients coming into the office to pay premiums and what have you. So I took every one of those opportunities to discuss life insurance with them. And on the placard, it said, or on the sign, it said, "This dollar is yours if I fail to ask you about life insurance." I thought it was pretty cool, and I, you know, in the beginning when I first got it, I'm thinking, my goodness, this is really kind of cool. Well, you know what? I lost a couple of dollars, and I'd replace it with a new dollar. And then I said, I need to get a little more proficient with this. So I stepped it up and I put a $20 bill in there. And I said, geez, I hope I don't lose a $20 bill. And thank goodness I never did. And then I stepped it up even further and said, geez, I'm getting a little positive, or a lot positive about this situation. I put a $50 bill in there. And then finally I graduated to a $100 bill. Now I was pretty proud. I lost a couple of the $1 bills in the beginning. And then throughout my career, while I had that plaque sitting on my desk with that $100 bill, I actually did lose a $100 bill one time. Every Friday I had a gentleman, middle-aged gentleman that had a motorcycle, lived in the community next door to us. And he would come in every Friday after work. He got off work at 3 o'clock. He'd usually get to my office at 4:30. And he would pay his premium, not every Friday, but monthly. I would say more on a monthly basis. But he'd come in and he'd pay his premium for his motorcycle, as well as his car and his homeowner policy. So he was on a monthly payment plan. And you know, he was a great guy. His name was Ed. I'll never forget him because he cost me $100. And he came in one day, and I was anxious to get out of the office, and it was nearly 5 o'clock and ready to lock the door and go on to my personal life after work. And he said, by the way, Joe, I'll take this $100 bill. And I said, he said, you failed to ask me about life insurance. Now, I've asked Ed about life insurance every time he'd been in my office, except for that one time. I got complacent. I let it slip. And that was the first and the only $100 bill that I lost. So kind of a neat story. You could duplicate the same thing, use a picture frame and type out the words on there. You know, this dollar, this 20, this 50, this 100 is yours if I fail to ask about life insurance. Believe me, it works for the simple fact that Sales 101 begins when the answer is no unless you ask. I also had another thing that, we always had like a retail type location with a strip mall or something like that back in the day. And I had an oil change place insured, and I'm thinking to myself, my goodness, I was at some symposium, a long time $1 million life writer made a suggestion and said, put a sign out in front of your office saying, hey, your wife had called and said to pick up some life insurance on your way home. So this was a sign that was spring-loaded that you typically see at an oil change place. I had it repainted, took it to a body shop. They painted it and lettered it and did just a terrific job. And that's how I was recognized in my community, stating, oh, you're the guy out there that says the wife called to pick up some life insurance on her way home. You know, if you let that resonate a little bit, it's really pretty magnificent. Also, we've put to the bottom of the screen some of these sayings that kind of go along with our business. If you die, the bank pays you what you saved. The insurance company pays you what you meant to save. You know, very powerful statement there as well. Another powerful deal of selling life insurance. Important life insurance statistics. Now, these are about a year old, and I'm plagiarizing some of this from some of the different webinars that I've been to and some of the different classes that I've been to. But I don't think it's changed much because 40% of all Americans have no life insurance. Whether they don't believe in it, they think it's too expensive, whatever the case may be, just simply don't have life insurance. Another interesting statistic, every 17 minutes, someone buys life insurance who will not live to pay the second premium. Again, my very first life insurance case, which unfortunately for that young man, but fortunately for myself, I'm in this wonderful business today and continue to flourish, thank goodness. Top 2 reasons why people don't buy life insurance. Nobody's asked them. Again, Sales 101, if you don't ask, the answer is no. And I also thought it was too expensive. You know, I'll go back to the $1 a day story. Do your job. Make sure that you offer somebody something. Because I'll tell you what, it's not fun when you get that phone call that somebody died and you don't have the product in the household. Here's another interesting set of statistics that I learned. Retention of clients. If you have a property and casualty client with life insurance, their average expectancy in your agency is 12 to 15 years. If you have a client with P&C only, it's only 5 to 7 years. If you have a client with auto only, it's 1 to 2 years. And I think these are pretty close on the statistics. That's why I found it interesting. Said the fatherless boy graduating from college, he doesn't remember his father, but thanks to life insurance, the father has certainly remembered him. That hits home. Here's another interesting statistic that I found to be a little bit troubling, a lot of bit troubling actually. Lump sum death benefits from life insurance are usually spent within 3 years from death. I mean, let that resonate. That's pretty awful. Here's another interesting statistic. You know, I read the newspaper, the obituaries on Sunday. It's the only day I read the negative news, if you will, because I try to stay positive on all days. And 72,000 plus people are age 100 plus, the fastest growing population. I mean, think about that. When I look at the obituaries in the paper, because I look and see if it was a client, a friend, and fortunately, it's not my name that's in there in the obituary section. But think about that. I mean, you look in there and it's 95, 103, 87 years old. People are certainly living longer. And therefore, when we get into the product section, when I should say in session 2 or 3, when they get into a little deeper dive in the product session, you're going to see where, in fact, it's going to have policies that run out to age 121. Which I think is just fantastic as well. And then our little phrase on the bottom, who will have to pay the biggest price for your life insurance? You or your family? So how to create the need? So we also always talk about income replacement, as a general guideline for obvious reasons. Here's another statistic that was interesting. Student loans, those are federally backed. If a student happens to die, unfortunately, they're going to go after the next warm body. The federal government, just like the IRS, they don't care who it is. As long as you're breathing, they're coming after you. That's an obligation that needs to be met to be paid, regardless of that. It's not like a credit card. You just can't, Joe or John passed away and it's too bad, Visa or MasterCard or American Express or whomever. Student loans, there's an obligation there. That needs to be paid. Very simply done as well. Term insurance is something that can handle that. And today, think about it. Students are paying these loans all the way into their 40s and some into their 50s, depending on their professional degree. Here's just a guideline one of the carriers had shared with us as well, too. So for somebody 18 to 30 years old, typically a death benefit amount, and this is just a quick analysis, 30 times the annual income. 31 to 40 is usually 25 times the annual income. 41 to 50, 20 times. 51 to 60, 15 times. 61 to 65, 10 times. 65 to 69, 5 times, and that's if they're employed. And of course, there's always exceptions to these rules, if it's a business need or something. And then 70 plus is typically 5 times. Another thing that's changed in the tax reform of 2017 is that the lifetime estate and gift tax exemption for 2020 jumps. So this year, for an individual, there's no estate tax due if your estate is valued at $11,580,000 or $23,160,000 for a married couple. So anything in excess of those limits is taxed at a 40% level. Not to mention what is on the state level. Here in the great state of Illinois, it's an additional 20%. So anything over this level amount, which we have these clients within our agency that have net worths of this dollar amount or magnitude, they're in need of life insurance to protect that estate and protect those assets. They didn't work their whole life to give the money back to the government. So it's double taxation in my estimation, but something to keep in mind. So when you have those clients that have those substantial net worths, those are some very nice premiums that you're going to be generating. Purpose, leave loved ones from becoming financially poor. Let that resonate. Maybe think about that. Lump sum death benefits, as I talked about before, should be used as a second opportunity to sell another product. As we discussed, usually within 3 years, that lump sum death benefit is diminished to zero. Why not sell an immediate annuity, which is going to give them some income for a longer period of time, in some cases a lifetime? Why not sell them another tax-deferred life insurance policy? It gives you a second opportunity. And in that particular case, that's when you should always have the carrier send a death claim check to you and hand deliver it. There's a couple of reasons. It reinforces what we do for a living. It makes you feel good, but you know what? Is it ever enough? It's your job to discuss this too. You do have an E&O exposure. And there'll be a couple of handouts too that you probably already have in your possession. If you don't, they're on their way. So we have a needs analysis versus using the graph on the left-hand side where we talk about the multiples of income. And then also there's a term life insurance sign-off as well. Here's a nice little phrase, one of my favorites as well. You're betting that you'll outlive your family, and your family is at the stakes. What about business owners and key person life insurance? Statistics. Again, these are aged a bit, but I don't think they're far from the truth. Business owners, 40% of them do not have a savings for retirement. They're banking on their business to be their retirement. 28% have no savings at all. Living paycheck to paycheck. Solutions. Life insurance can be the forced savings and the supplement retirement and tax-deferred interest, as we discussed as well. You have partnerships in business too. So buy-sell agreements, fund them with life insurance. If a business partner dies, do you want to be partners with the spouse or the siblings of the deceased? No, you fund it with life insurance so that you can buy them out of the business. So something that needs to be reviewed at least annually, semi-annual, or annually, or every couple of years, for the simple fact that the business value is probably going to increase, especially in America. It's a beautiful thing. And then key person insurance. Think about a business owner that has a key person that is really, if that person, something happens to that person in the event of a death, is that business going to suffer financially? Absolutely. Most businesses do have key people. We have key people in our organization as well too. Usually a multiple for that is 10 times the salary for the death benefit. Think about that as well, because the business is going to suffer financially. And then executive bonus too, which again, I'm sure Kelly and his team is going to, Kelly and Steve will get into that in session 2. Kathy, back me up one screen, please.
Sure, hold on a second.
I forgot our little nuance on the bottom. Suppose that you didn't get paid for a week or next week or for several months. How would you get along? Could your family manage any better if your salary never came in again? Again, just some powerful phrases there. Thank you, Kathy.
You're welcome.
So what products are available? Again, I'm not going to do a deep dive. I'm going to kind of skim coat this. We have term insurance. So term insurance is like renting an apartment, if you will. No cash value. You pay this month, you have the coverage. If you don't pay next month, you don't have the coverage. It's usually for a select period of time, 10, 15, 20, 25, or 30 years. But the cool thing about term insurance is that it's usually for covering a liability. What's a liability? A business loan, a mortgage on your house, young children that need money for their education, if in fact you're fortunate enough to pay for their parochial schools or education further on in life, college, what have you, food, survival. Your wife has to stay home if something should happen to you, or your significant other has to go back to work. So what's cool about term insurance is that after that particular point in time, and as long as you're before, in most companies, age 70, it has a conversion privilege. So after a particular point in time, you can convert, or any time from the time the policy is usually issued, you can convert that policy to a permanent type policy where there is no, it's going to run infinitely to age 121 as I discussed earlier. Some carriers will give you that conversion option up to age 75. There's universal life policies. Again, there will be more in depth in that in lesson 2 next week. No lapse guarantee with a long-term care rider or without a long-term care rider. This is a unique product to our industry. Again, goes to age 121 if opted that way. But long-term care insurance, typically you can buy a standalone long-term care policy. You can buy a no lapse guarantee universal life policy with a long-term care rider for virtually the same cost that it's going to cost you for long-term care insurance standalone. Plus, you're going to deal with rate increases with long-term care versus you're going to be in a locked-in premium because it's a no lapse, and the word there is guarantee. That's the clutch word. So something to consider there. Then you have your traditional whole life policies, which are guaranteed death benefit, guaranteed premium, guaranteed cash values. And then we have what's called a final expense product. So this is a graded whole life policy typically. I think the most I've seen them issued for is about $35,000. You can start at $1,000 and usually go up to $35,000. Usually the first year is a return of, if something should happen, is a return of premium of the premiums paid. After the first year, it's 50% of the death benefit that was originally elected. And then usually 2 years and 1 day, it's 100% of the death benefit if the individual lives. Typically, there's only 1 to maybe 4 questions to ask And it's a simple question like, have you ever been diagnosed by a medical physician, practicing medical physician, that you are terminally ill, or if you're infirmed in a hospital or home or facility? Pretty good product, pretty strong product. There's a lot of people that sell a ton of that all day long. Then you have the old-fashioned traditional 10, 20, or 30-year pay whole life policy. Some people like this. It's a forced savings, number one. Number two, it's a definitive time to pay the premium. The policy's paid. It continues to go on. The death benefit continues to go on. The cash value continues to grow in most cases as well. It's a traditional old-fashioned type policy. However, some people have a problem saving, as we've seen from statistics in earlier slides. Also, too, take this into consideration. There's discounts that may be available with your property and casualty carriers if you have life insurance in the household. And just a few of them that we know of off the top of our head is AAA, to give you an example. They offer a 5% discount. MetLife offers a 5% discount. Now, this is on auto only, too. Kansas City Life / Grange Insurance, they offer a 5% discount on the auto by having a life product in the household. You're going to learn more in lesson 2 with wealth management in the box, and lesson 3 with Peak and Life on the specific products. So check with your property and casualty carriers too to see if there's any additional multiple policy discounts that are available. Buying term insurance is like putting a bucket under a leak in a roof. You get temporary relief, but eventually you'll have to do something about it. Death claim scenarios and statistics. When someone dies, the first person they contact is who? Their property and casualty agent. Gee, Joe passed away. How much life insurance did he have? That's pretty devastating news to the individual, but it's even more devastating when you tell them we didn't have any. And obviously, do you want to be your client, be the person to tell your client that there was no life insurance? Not enough life insurance. It's never enough. I've never met a widow or a widower that said my spouse left me too much life insurance. Great statistic there as well. The financial burden is one thing, but obviously it would be even more sad news if there was no life insurance. So again, you're helping your family with the mortgage, college, how to manage life insurance and death benefit upon it, and a death claim as well too. Gives you that second opportunity to sell something. So how to get started today? Sales 101. If you don't ask, the answer is no. Try that. This dollar is yours, and put that sign on your desk. How to find prospects. Somebody walks into your agency. Somebody calls you on the telephone. I need to make a vehicle change. What have you? Opportunities in your agency is with every client. Engage your CSRs, your producers. Do personal insurance reviews. Put Post-its around your office on computers saying, hey, ask about life insurance. Listen to cues that trigger major life-changing events like marriage, birth, divorce, death of a family member. All of these things get people rethinking. Think about the people that call your office. Something happened. There was a life-changing event. So make sure you listen for those cues. Have a checklist of questions for every call. Get email addresses. Obviously, with Epic, we're able to do just a ton of inexpensive marketing to all of our clients. You'll get the phone number, double check the address. Who do you pay for your life insurance? Who was it with? Ask them to send you a copy of their life policy just to keep it in file, so that, hey, if that family member does call and there is an unfortunate death in the family, it might not be with you, but you know what? They're certainly going to be grateful, and it's going to give you an opportunity to sell those folks some life insurance down the road, or be their property and casualty agent as well. Send out a life insurance quote with every homeowner quote that you do. Ask how much the mortgage balance is. They're giving you a ton of personal information. This information is freely given to you. I used to do that. It was effective as well. Automation letters with a follow-up phone call. Again, Kathy and Megan are going to get into that in session 4. monthly newsletters, again, session 4. Send articles, about some of the different nuances that we spoke about on the bottom of each one of these screens. Learn more about your customers, keep that personal touch, show genuine concern. Sell what's good for them. Don't sell what's good for you. When you show genuine concern, people appreciate that. No different than when you're taking that declaration page of their life insurance and you might not be the writing agent. Hey, how about an insurance review? What they have might be good stuff. You got a good policy, keep it in place. That goes a long way to anyone. Obviously, tell the story. Tell a real life story of something that happened to you. Ask for referrals. One of the things that we implemented in our agency, I would always have the staff come to me and say, hey, you know what, Kathy Racy referred me Mark Ruskin. And, I would pick up the phone and call Kathy Racy and tell her, you know what, I really appreciate you giving your full trust in our agency and our ability to take care of your insurance. And you know what, there's nothing more valuable than you sending a referral to me. And I just wanted to personally call you up and thank you for that. I really appreciate the trust you put into our agency. You may not have needed it yet, but do you carry a spare tire in your automobile? That's a pretty good one as well, too. Again, I tried to pick out some of my favorites to put on the bottom here. Close the deal in the application process. I know we're running a little bit behind, so I'm going to kind of go through this pretty quick. Life insurance is not something you buy. It's an instrument to carry out your plans. Again, you guys will all get a copy of this too. So let's talk about the pros and cons of the application process. Tips on the application. I was always a full, complete application kind of guy. Later in my career, they came out with the quick application where you could just do an app over the phone. The paramed goes out there and gets signatures, and everybody, it's an instant gratification society that we're in. So, which isn't a bad way, and I'm not knocking it whatsoever. But I always took a full application, and yes, it was paper back in the day, and now it's more electronic, as we know. But I would take that application for the simple fact that I always wanted to know what's the health history here. If I come back with a situation where it might be a little bit like myself, I'm about a foot short for my weight, so therefore there would be maybe a rate-up situation for that. Or maybe there's a situation where there's diabetes, or there's health history from cancer in the family, a premature death of a sibling or a family member, mother or father. So this way, rather than getting a policy delivered to you with a rate-up situation, and there's a sealed envelope there to give to the client, and the client says, well, you know what, you tell the client, well, we applied for this amount of coverage. However, the rate is not what I quoted you because I don't know. The answer is inside the sealed envelope. It's nicer to go in there and discuss it with them. And it might be a temporary situation where, this rate up may be removed at a later date if you do X, Y, and Z. But it's nice to know and have a candid conversation with them of why that rate up is on the policy. So that's why I always took a full application. I just found it as a better practice for me, and it increased my persistency as well, too. And then we talked about the online short form application. There's pros and cons. You get somebody that's young and healthy, take the online application. Everybody's in a social media world today. Not the end of the world, too. Tips for delivering the policies. I never, ever mailed the policy. I always hand delivered the policy. Why? It's a second opportunity to resell the policy, re-engage with them, tell them why, in fact, you bought the policy. Remember, we discussed this because of this need in your family, life-changing event. Whatever the reason is, always hand sell the policy. You'll be surprised, and a lot of times you'll come out of there with another application. And it solidifies your persistency as well. When do you start writing life insurance? Why not right now? With that, I want to turn it over to Mark Ruskin, my good friend and a life settlement specialist. He's a CHFC, he's a CLU, an REBC, RHU, and I know he's working on a few more designations as well. So, Mark, take it away.
Okay, thanks, Joe. So Joe had spent the last 15 or so minutes talking about acquiring life insurance. I'm going to talk about discarding it. So those of you that aren't familiar with life settlements, we're going to give you a quick overview of it as to the foundation, the nuances, the facts, and the benefits. So the foundation. So 1 in 7 life insurance policies result in a death claim. That suggests that 6 of every 7 are dropped. And of those, 3.4% of term, 12% of UL, 15% of whole life, etc. The 2 commonly known exit options are term insurance, simply don't pay the premium, policy will lapse with no value. And if it's permanent insurance, typically has some accumulated cash value. And the insurance company will thank you very kindly for not dying, and here's your money, and they will part company with you. Foundation of life settlements goes all the way back to 1911. Justice Oliver Wendell Holmes on the Supreme Court said life insurance is property, as such it can be sold. That created, again, the foundation for settlements. So what exactly is a settlement? Well, it's the sale of an in-force life insurance policy on an insured 65 years of age or older with a life expectancy of 2 to 12 years to a third party. We'll talk about who they are in a moment. For the fair market value of the contract, which is greater than the surrender value, but less than the death benefit. And a couple of statistics that I found some time ago. Conning and Company, 1 in 5 policyholders over 65 is in line for a settlement. And Americans 65 plus forfeit $112 billion annually by lapsing or surrendering. And this will come up typically of the hundreds of times I've talked about settlements with clients and prospects. It typically asks, is this a viatical settlement? The answer is no. Viaticals are for terminally ill people, less than 2 years, as you may recall a moment ago. Life expectancy is chronically ill, 2 to 12. And I've heard these comments literally hundreds of times as well. What are they? Too good to be true? Is it legal? How do I qualify? Never heard of this before. How long they've been available? What's the catch? And the big one, my other advisor never mentioned this to me. That's the sweet spot for everyone on the phone. So we've all heard this phrase, death and taxes, the only 2 guarantees in life. There's a third one. There have been approximately 120 to 130,000 settlements done over the past 15 years. That's the period of time I've been involved with these, as a matter of fact. 100% of the people that qualified for and chose settlements received funds exceeding the surrender value. And this says the next screen, we're going to make this the last screen. We're going to see why in a moment here. So this comes up too. Is the guy down the street has a few bucks in his pocket buying this? And the answer is no. Strictly institutional buyers. Folks, I'm sure you've heard of Berkshire Hathaway, Deutsche Bank, Goldman Sachs, Credit Suisse, JP Morgan, firms such as those. Those are the people that are buying these, or the firms rather. Insurance companies love lapses. That's why they're not particularly crazy about these. And the reason for that is they have to pay the claim. If somebody buys a life insurance policy, which Joe just talked about, there's every expectation if you pay the premiums, you would expect to have a benefit paid. Northwestern Mutual loves lapses very much. Every basis point, that's 1/100th of a percentage point, is $800,000 in profits. That's why they really enjoy lapses. So, educating, delivering life settlements to donors does not require you or your staff to be diverted from what you do day to day. Doesn't require you to build or buy your own settlement arm. Doesn't require a major investment of your time and resources. And the reasons for that, I am your in-house resource. I handle the entire process on your behalf. All you need to do is open the door, and I'll take it from there. One place where I've been very active and successful is in the not-for-profit arena. This article I co-wrote with one of the 30 or so brokers that we work with who are the backroom folks. And you're welcome to these articles if you'd like them. But both of them are eerily similar in that there were policies donated to charities with the expectation that the charity would pay the premium. They gladly accepted. Problem became, though, that the premiums were a bit too expensive and the charities did not have the money, couldn't segregate it to pay the premiums. They were going to let them drop. Story one was a permanent plan, $50,000 of cash. I brought them $800,000, 16 times as much. Second one was a term policy, no value. I brought them $630,000. So all in, $1,430,000 versus $50,000, and you can see how interested charities might be for this kind of a thing. So for anyone who's sitting on a board, knows of someone sitting on a board, insures a 501c3, this is a sweet spot that you can bring to them, and I will help you do it. So talk about it is easy. This will take you 15 to 20 seconds. Happy to say we've added a life settlement option for our donors and or clients' consideration. Our in-house settlement professional has 40 years of experience, just like Joe, as a matter of fact. I'd like your permission to tell Mark about your situation, and if he may be able to offer you a better solution, should I set up a meeting for the three of us? You can say this every time to every person you chat with. A to Z contributions, I'll just leave this to you to read. I'm sure each one of you have this PowerPoint, but essentially says, you open the door, I'll take the rest. Here's the process, starting red like a clock, starting at 12 o'clock, development of communication initiatives and identifying insureds. We'll do that together. We'll determine the approach preferences together, and from there I'll take it. You set up the prestige introduction or the opening conversation. From that point, I'll handle the initial conversation fact-finding interview. I'll gather the data, complete forms, do the analysis, the research. I'll collect the underwriting items, negotiate with the funders, collate the bids, and then we'll have a client solution summary meeting. If they accept, we'll prepare the contract, implement the settlement, and send them the funds. So this is the thing I think that everyone would enjoy. These are 16 or so cases I personally have done myself. If you look at column number 4, you'll see the cash surrender value. If you look at column number 5, you'll see the amount that we created. And column number 6 is the multiple. So what you'll notice there is the average is approximately 10 to 12 times as much. But the one I think you'll find interesting or keenly interested in is the last two. Advisor comp, 25,000, 62,000, 23, etc. Top one, those 25 plus another 24 for the term conversion, or approximately $50,000. And I knew enough property and casualty knowledge to pass my exam back in 1980. I have written one auto, so I don't know anything near amount that folks on the phone do. But what I can tell you is this equates to a $500,000 commercial account. So each one of you can think of the last time you wrote one of those. The interesting thing about this is you'd make $50,000 for the referral, and the amount of involvement you would have would be the introduction. So at the lower right-hand corner shows the total compensation for these 16 cases, $1,400,000 and change. Okay, Joe, take it away.
Mark, thanks. Appreciate you. Kathy, can I get control?
I sure will. There you go. You should be good.
Okay. So what does a life settlement prospect look like? Just to reiterate, age 65 or older, $100,000 of death benefit or more, life expectancy of 2 to 12 years. Term insurance must be convertible. If you recall, I talked about age 70. Some carriers are age 75 to convert that term insurance, which, by the way, you get the commission on that as well. Just keep in mind, if you always do what you have always done, you will always get what you've always got, the Wizard of Oz. I just think that's very profound. So by doing nothing, you're not going to get any results, obviously. I just wanted to talk a little bit more about the registration. We've got some great information, no different than we put these webinars on. Kathy and her team, our Vice President of Education. I encourage everybody to register for the events and her roadshow as well, too, with her and Laura on the road. And with that, we can open it up to questions. We got a few minutes left.
Yes. Any questions, anybody? Go ahead and chat them in if you would, please, and we'll be happy to answer them. Anybody? Any questions? You got Joe here. We have a few extra moments. You did great on timing. So it doesn't look like it says Eric. She does have a question. So let me open up your mic, Eric. Good morning, Eric. How are you?
Happy. Good. How are you?
I'm great. Great. Thank you.
Hey, Joe. How are you this morning?
Excellent. Thank you, Eric.
Hey, I have a question. I'm sort of running into, I think, a couple of cases where I have some, from the captive side, and I'll say they're mainly term policies of former customers kind of coming at me saying, hey, now that you're on this independent side, you guys are touting, all these different carriers you're working with. What are your thoughts on sort of, some of these policies that may be, 3, 4, 5 years old, and the propensity to move them from one carrier to another? Obviously I realize they're older, their health may have changed, there's those sort of things, and I always kind of keep it at arm's length, just cautionary to not get their hopes up, but hey, I'll look into this and kind of get back to you. And I see Joyce Thomas is on the call. I've been working with her on some of these as well, but I wanted to just kind of get your thought on how to approach that, or sort of answer that question and sort of move forward.
Sure, appreciate the question, Eric. So obviously you need to do a little pre-evaluation to find out if there's any pre-existing conditions there, anything that would forbid them from qualifying for insurance. One of the other things that I would suggest doing is taking an application. One of the things I alluded to talk about during the application process is that when you see a condition that's going to change the rate that you originally looked at, you prepare them ahead of time and let them know that, hey, this could cause an increase in premium, or we're going to have to decrease the death benefit if you're set on a specific budget. But take an application and send it into the carrier. Send in the replacement forms that you're considering replacing the policy to from whoever the carrier may be, and take it from there. Now, I also know that I believe January 1st of this year came out the 2001 mortality table. I don't want to overstep my bounds there, for the simple fact I'm sure that's going to be covered by Kelly and Steve and Joyce tomorrow. But I'm pretty sure that went into effect the first of this year, or sometime this year it's going to go into effect. So that could have some good or bad information on where rates go, because as we know, as modern medicine comes along and different things, people are living longer, which is bringing life expectancy up and hopefully driving rates down in most situations.
Perfect. Thank you, Joe.
You bet.
Kelly Carter would like to add to that too, Joe.
Go ahead, Kelly.
Can you hear me okay?
Yep, we can hear you.
Yes.
Hi, Kelly.
Great job, Joe. Hey, just to dovetail on what you said, Joe, you are correct with respect to that. So in a lot of cases, what we're seeing is, get that current policy over to Joyce. And in today's world, coming from the captive side and looking at the independent, a lot of times for the same premium, even if the client's health has changed a little bit with the new CSO tables, you're able to get them generally better insurance, maybe more death benefit for the same premium or less. So there are opportunities to look at that. You never want to cancel that insurance, Joe, like you said, until you were sure about the health scenario. We even have the ability to take informal underwriting prior to a formal application, depending on the situation. So you always want to look to improve that client situation, because it's going to make you look, as a risk manager, it's going to put you in a better position with these clients because they already trust you. And if you can improve their situation at the same cost or lower, or get them more death benefit, then by all means, send it over and let's look at it.
Fantastic. Thank you, Kelly. David Cott, you have a question? Thank you, Eric. David Cott, do you have
yes,
there you go. We can hear you now.
Perfect. Yes. Great. Thank you. Thank you, everyone at ASNOA, for putting this on today. Greatly appreciated. This is great stuff. Looking forward to the next sessions, too. I've done a number of buy, sells, and key person policies, and I've got a very good prospect coming up. It's about $18, $19 million a year company, 2 owners, and it could be kind of complicated. Would there be any kind of assistance available in helping with the process?
Sure, Dave, absolutely. We have all kinds of assistance out there. And actually, believe it or not, it's free, which is good. And since I know Kelly and Steve are on the phone here, there's a great resource for those fellows right there to just step right up to the plate and get you the assistance that you need.
Perfect.
And even if there's a need, they'll travel to meet with the client as well.
Fantastic. That's great to know. Thank you very much. We'll definitely keep in touch.
Thanks for joining,
Thank
Dave.
you, David. Thank you. We have more questions for you, Joe. Let's see, we'll start out with Kristen Morris. Maurice, do you recommend advertising that you offer life settlements?
Sure. We just did an advertising to about 1,000 501c3 charities in the Chicago metropolitan area to spike interest. A lot of people don't know about it. As Mark said, there's a lot of 501c3s that are paying premiums on people that donated their policy to the charity, which is unaffordable. They need the money now. Most of these states have cut off funding to a lot of the 501c3s if they're funded by the state in particular. So it gives them an opportunity to get that cash in their hand a lot faster, versus having a golf outing or a black tie event or a fair or whatever kind of gala they put on to raise money. So absolutely, yes. Talk to each and every one of them in your community. And then certainly we can do webinars or in-face presentations to them.
Right. Thank you. We have another question. Suzanne Bovaird. Hi, Suzanne. I see it is recorded. Will it be available to share with our staff? Absolutely. I will get today's recording out to each and every one of you to be able to share with your staff. So thank you for that, Suzanne. Let's see, Candy Keys, Winford. She said, can you explain how commissions get paid through ASNOA? I am still a little confused on how we get paid. And you know what? I know, I mean, it's no different than any other policies, correct? We just, you put the policy in Epic. Right, you put the policy in Epic, Candy. I know I can answer that one. And if you put that policy in Epic, which will show you exactly how to do that in lesson 4 to make sure you're doing it properly, and the commissions will come here and it'll get paid to you just exactly like all other policies. Okay,
like
and Jamie Lyles. Jamie Lyles asked a question. Can you send a photo of your desk place card that says if we don't ask, you get $1? She would love to see that.
I don't have one anymore. Again, I was just back in the day when I was active. I'm more administrative today. But we can get something out. Kathy, remind me. We'll get something out to everybody.
Yeah, I'm thinking Megan can do a great job with that. She's going to be able to do a great job with the desk sign. So we'll have that added to lesson 4 and have a visible view of it, or several options for you. Great question, Jamie. Awesome. Thanks for asking. And any other questions we have? All right. Anybody else? Any other questions? Just being so silly. Brian Schultz is being silly. So it looks like that's all the questions that we have for now. Thank you so much, everybody, for joining. Again, we're going to send out an evaluation. So if you think of a question after you leave here today, please send that to us. Send it to my training at asnoa.net. Here's the resources, additional resources out there for you. We want to say congratulations for completing lesson 1 and how to start selling life insurance and life settlements. And we're looking forward to seeing you next week, where we'll begin lesson 2 with wealth management in a box with Kelly, Steve, and Joyce. So thank you all for joining today. Great job, Joe and Mark. We appreciate everybody and everybody for joining and taking time out of their day, because we do know knowledge increases revenue. So have a great day, everybody. Thank you, Joe.